Hi there, I'm Dean Heskin. Thank you for tuning into our podcast, The Secret War on Cash, brought to you by Swiss American Trading Corporation, of which I am president and CEO. And I have with me my co-host, Chris Agelastos. Chris, how are you today?
I'm doing all right. Summer's halfway over, maybe a little more than. Kind of crazy.
Summer is full swing and getting to the end of the swing. I mean, time is just absolutely flying by. I can't even believe it. Well, kids go back to school in August, which is just
Yeah,
basically a week away or so. So,
yeah,
not that my kids do, but those who have kids that do those kind of things.
yep.
Well, let's talk some economic things, some financial things. We'll start off here from the Daily Huddle with billionaire Ray Dalio. I think it's is it Dalio or Dalio?
Da- Dalio is how I always say it, but
Ray the
your guess is as good
Delio
as mine.
warns of potential 1970s style stagflation, which just has a nasty ring to it, just saying it.
Yeah.
He says there's not enough money to go around. So as now let's talk stagflation first off. For those of you listening, if you're not familiar with that term, how he describes that is a period of high inflation, high unemployment, and low economic growth. So all three of those sound not too good.
Yeah.
Then you have which we already are seeing signs of this, although some of the reports that come out, you wonder that they seems like there just recently was a positive job report, but yet you look at the world around us and it's like, where in the world are they getting these numbers from? Where is this coming from?
Right.
And the bottom line is that this is Ray Dalio is not looking to promote something bad. It's just he's taking a snapshot of what's happening in our economy around us. He says, hey, this is what's going on. So tell us what stagflation means, Chris. I mean, we know again the high inflation, high unemployment,
Yeah.
and low economic growth, but what is that going to look like for us on our day-to-day life?
Yeah. Well, I mean, I feel like we're already seeing a lot of that, right? I mean, we've been complaining about inflation the last year or two, especially. Unemployment, I mean, we got a little bit of a boost right after COVID, when things picked up a little bit. People were able to kind of easily jump ship and change jobs, and that's gone away the last year. I'd certainly say we aren't seeing growth right now. I mean, the economy's kind of hanging on. So, yeah, I don't think he's over exaggerating this at all. I think, like you said, he's just reporting what he sees. And we've also seen, the dollar take a big decline this year. About 10% compared to other major currencies out there. So
Well, and
these
he and
are,
he talks about that, how the dollar, he says it may underperform other currencies,
mhm,
and but he also says, and for those of you tuning in, if you're not positioned in gold or silver, now is the time to do it, because he says these currencies are going to underperform, and they
mhm,
won't be doing well relative to hard assets like gold, and gold and silver
right.
actually run hand in hand with each other.
Yep. And these aren't just US problems. Even though, yeah, the dollar has declined, compared to other currencies. Japan, China, Europe, he mentions very directly in there that they're struggling as well. And all of these nations, like ours, have tried to spend their way out of the hole, and there just isn't enough money to go around. And that's where he says, something like gold to hedge against the dollar is going to be the better performing currency compared to the others. I also like how he refers to gold as a currency in here, which a lot of people, especially in the government, try not to do or to acknowledge. So, I mean, he's saying essentially, unless the government is going to cut spending and raise taxes to lower our deficit, that this is the stagflation is inevitable. And we all heard a lot about this big, beautiful bill and all the spending that was just passed in the last few weeks here. So I don't think the government is going to change anything significant. I think people better do what they can to protect themselves and hold on and try to weather the storm.
Yeah. That big, beautiful bill. I think only Trump could, all these years of having presidents and having different bills passed, only he could come up with a description, big, beautiful bill. I don't think
Yeah,
that's ever been used before. Maybe I'm wrong, but I've certainly never heard it. Well, let's
no,
let's stay on Ray Dalio here as well, because
Mhm.
looking at this next article, the demand for U.S. Treasuries may fall short amid surging supply, warns the ex-Bridgewater exec Rebecca Patterson. So she was with Bridgewater, which is where Delio is,
Yep.
and she's basically mirroring a little bit of what he's talking about, just a little different in terms of what's happening with the debt. The bottom line is this: you have the dollar year to date has already lost 10%. It's
Yeah.
the worst it's done in 50 years. Worst it's done in
Right.
50 years. And
Yeah.
the concern kind of for this as well. I mean, I don't know how I feel about this, Chris, and we'll ask you here in a second. But
Hmm.
she talks about how and first off, when you're talking year to date, a 10% drop in the dollar already, I don't know if I would call that a slow bleed necessarily. That seems like kind of a quick bleed, in my opinion. But
Right.
with that being said, I don't know what sounds better. I mean, when she's saying a slow bleed, are we talking like bleeding out, like bleeding to death, or is there going to be some end in sight to this bleed? Because that begs the question: do you want to have, I don't know, like a just a quick bleed and start over, like a reboot, like many
Right.
people have talked about, or do you want to continue with this slow bleed? So, what's she
Yeah.
talking about, and what's this going to look like?
Yeah, well, she's saying again, you mentioned the 10% drop, worst in the last 50 years. So, people are paying attention to that. Americans are diversifying out of the dollar, especially into gold and silver, which is part of the reason why we've seen such good climbs there in the last year or so. Now, foreigners are also noticing this, right? And so they're also diversifying and pulling back compared to what they would normally be doing and investing in our country. And pension funds, which are a really large part of our Wall Street market here in the U.S. Large pension funds that have big pools of money that are able to invest in our markets, and they're still investing in the market. That's why we haven't seen a major decline in the stock market. But what they're also doing is hedging their bets against the dollar's obvious decline. And
Right.
so we haven't. Yeah, I think that's really what's kind of propping it up and causing her to say, this is going to be a slow bleed. She also points out that these foreign investors who have a lot of U.S. Treasuries are in very short tenure bonds, which is 3 years and less. And so she doesn't see everybody just immediately dumping those bonds, but over the next few years, as they come due, they'll just let them expire and not replace them. Basically, let them roll off their books, and that's part of that slow bleed. So I feel like it would be better in a lot of ways, even though it would be immediate pain to have a quick decline and reset so that we can grow back from there, than this kind of drawn out drop in the value of our dollar and inflation and unemployment and all of that. So her,
Right.
just like Ray, she's saying, she's very bullish on gold as a strong hedge against the dollar, and silver behind that. So again, people just need to pay attention to what's going on, get some of their money into precious metals, and diversify away from this. It doesn't mean that you could be completely unscathed, but the idea here is to spread your money out a little bit so that you're not so negatively impacted by the continued fall of the value of the dollar.
Right. You're absolutely right. Well, if you go back to the first article, and you talk about this slow bleed, referring back to what Ray said, that slow bleed is a period of stagflation with high inflation, high unemployment, and low economic growth. So that's to your point. If that's what it's going to look like with the slow bleed, personally speaking, I think most people out there would say,
Yeah,
let's get it over with quick and do what we can to
right.
regroup and regrow. So, for
Yep.
those of you tuning in, if you have not contacted us to receive your copy of The Secret War on Cash, please do so. You'll find it very informative and very helpful. And also, you can request information on precious metals, how to buy gold with your individual funds and/or retirement savings. It'll answer all the questions that you might have if you've been thinking about doing it, just didn't know what to do. The best thing that you could start with is making that phone call. So if you call us at 1-800-289-2646, or you can text us at that number, 1-800-289-2646, we would be happy to get that out to you. Or you can also visit us online at www.swissamerica.com. Chris, thank you so much. And for those of you tuning in, thank you for being with us here today. Hope you have a great rest of your day, great rest of your week, and we'll talk to you very soon.
Take care.